Yep.
Welcome and thank you for joining us at our special COVID-19 insurance webinar today. I'm your host, Shandell Devon-Centers. Before we begin, I just want to go through some housekeeping with you. As there are several of you with us, you'll all be put on mute to reduce any background noise and distractions. Should you wish to ask a question, please type the question in the chat box or raise your hand and I'll unmute you one at a time. I'd like to now introduce you to our NECAGuard presenters from Willis Towers Watson, Lee Frost and Alexander Justin. NECAGuard offers tailored insurance packages to NECA members, including professional indemnity, public liability, motor vehicle, general and commercial property and income protection. Willis Towers Watson is a global broker who leverage off worldwide networks with a high knowledge of local markets. Today, the team will focus on the effects COVID-19 may have on insurance. They'll discuss what may and may not be claimable. The discussion will cover the impact for various policies, including personal accident and sickness, workers' compensation, public liability, property and travel. There'll be plenty of time for questions and answers after the presentation. Now I'll pass you on to Lee Frost. Thanks, Lee.
Thanks, Shandell. Thank you very much for the introduction and welcome everyone. Just by way of a brief sort of overview of how we'll run this, I'll just do a sort of a 2 or 3 minute preamble, just a run through of the insurance market in general and what we've seen to date and what we're sort of predicting to see. And then I'll throw to Alex, who'll go through sort of a line by line view of what we're seeing with the NECAGuard product specifically. And around that sort of public liability, business pack, motor, etc. So in terms of a broad overview, this is rapidly changing, and it's probably no news to anyone that what we presented 2 weeks ago is no longer current today. There's just so much going on in terms of the way that insurers and brokers indeed are sort of reacting to the COVID-19 scenario. So most of our insurer partners are working remotely now, which means that we've still got access to them. But what it does mean, and what we've experienced to date, is while those service levels are still there, it is taking a little bit more time to get answers and to, I guess, obtain quotations, etc. So I guess just being mindful in the current environment that we're all operating with potentially remote platforms and that things are moving a little bit more slowly than what they have in the past. But rest assured, those insurer partners are still available to us and can answer our queries and sort out any claims you may have. What I would say as well around those insurers, there's been no blanket approach, so no sort of industry-wide approach to how we address claims and the like, and that's across all classes. Everything seems to be just on a very case-by-case basis. So what we would encourage you to do, and Alex will expand on this a bit by class, but if you do feel like there is a policy that you may have a claim under or you have some questions around, just speak to us or speak to your existing broker about what those options are so that we can investigate them, as I say, on a case-by-case basis. The other thing we've seen is no sort of blanket exclusions or new sort of endorsements being added to policies. So we did have back sort of early 2000 the SARS virus, which some of you will remember, and what that caused was sort of a biosecurity act to be included in a lot of the property coverages that we're seeing. So this isn't something new, and we haven't seen sort of a wholesale change from insurers around how they want coverage to work. We have seen some restrictions around business interruption on renewals because obviously insurers are nervous around that. And we've also seen some changes around property owners cover. So where you've got landlord type protection on rental, we've seen some changes around how that's being approached by different insurers. But again, nothing industry wide at this stage. So it is certainly case by case. In terms of rate increases, the renewals we're going through at the moment are in line with what we'd seen pre-COVID. So there are slight increases across majority of insurance lines. But again, Alex will go through a bit of a line-by-line sort of view of what that looks like. Really, that's kind of it from me. I just wanted to give you a flavour of sort of what we're seeing out there. And I guess for the rest of today, I'll let Alex take control and take you through a brief presentation. But I'd encourage you to sort of, at the end, if you have got any specific questions, to throw them at us, and hopefully we'll be able to assist. So without any further ado, I will throw over to my colleague, Alex. Over to you.
Thanks, Lee. So I thought we'd start off with public liability, as that is the policy that all electrical contractors will have, as it's usually a license requirement or needed on particular contracts. So as you know, this policy is there to cover if you become legally liable for damage to a third party or bodily injury to a third party. So in the case of COVID-19, there aren't any, or there usually shouldn't be a general exclusion. And so we'd still expect it to respond if you became legally liable for injury to a third party, which would include if you were liable for a third party, i.e. one of your customers, becoming sick with COVID-19. Originally, when we did this presentation a couple of weeks ago, we talked about how as the virus spreads more, claims might become harder for a third party to evidence, because it would be up to them to prove that they got the virus from one of your contractors. But as we've seen the rates actually decrease quite rapidly, that might actually become a factor again. So if you had a contractor go out, they didn't know they had the virus, and they pass it on to somebody else, you may see a claim come your way. So the policy there we'd expect the policy to stand up and defend that claim. As I said, it would be up to that third party to demonstrate that that's where they got it. I guess I'd also touch on that NECA has some really, really good resources that have been made available for how you should deal with those situations in terms of what processes should be followed to avoid the chance of such a thing occurring. And providing you are following those processes, or if those processes are at least being advised to your contractors, we'd still be expecting then the policy to respond. So jumping forward to personal accident and sickness, this is often a voluntary policy. Not everybody will have taken it up, but if you do have contractual agreements under an EBA, it might be a policy that you have. Likewise, there isn't a general exclusion here, but the things to be mindful of is that this policy will usually only respond to a newly acquired sickness to that covered person. So if somebody did become sick with the virus and was unable to work for a long period of time, depending on what your excess period is, which is usually 7 days or 14 days, then this policy would start providing the income protection until they are able to work again. That would include, we'd expect, if they were sick and then were forced to quarantine or isolate, even if they were technically able to work, that sickness would still be preventing them from working. The catch here, though, is that we wouldn't usually expect this policy to respond to people that have been forced to quarantine that haven't themselves acquired the infection. And that's simply because the policy is usually structured that it is around a sickness to the individuals. Quarantine situations is usually outside of that if that person isn't sick themselves. So that gives you a bit of a broader cover, because as we go on to workers' compensation, this one would be trickier. So workers' compensation covers injury or sickness to your own workers, but that needs to be if they became sick or injured in connection with their work. Usually that involves if they're injured at work or travelling to work. So the sickness would be much harder to, your employee would need to demonstrate that they got sick whilst they were working. Again, we did expect if this was to get quite widespread, that would be hard for them to prove. That might be easier now. So if they did go to a customer's site and there was known to be somebody sick there, and then they passed it on, there might be that they might be able to establish a link that it was through their work that they caught the disease. And then again, the policy would respond and pay that claim. The positive on that as well is the recovery rates and everything for younger people, working age people, I should say, is usually pretty high. So we wouldn't expect a claim to be fairly big. But even if you were following procedures, workers' comp is quite onerous on employers. So the claims will probably still fall on those policies, even if you are following the right procedures or have advised the right procedures, but at least you know then you've got the cover there for your employees. So I'll kick through onto property. We mentioned this one mainly because a lot of people will take out business interruption as part of their property insurance, which by its name might sound like there could be some cover there, but the idea, as it is part of a property policy, is that claims need to be connected to damage at your actual property. So although there are some extensions to cover infectious disease, these are usually limited to an outbreak at your property, and then the government closes the business because of that. So although in this case, in many businesses, they are being forced to close by the government, it's not due to an outbreak specifically at that property. Even if people have contracted the disease through transmission at that property, the cover here is really more geared towards small outbreaks, like, say, Legionellas from a cooling tower on your own site. There's usually an exclusion for declared pandemics under such a policy. As Lee mentioned at the start of the presentation, the scope for insurance to cover widespread closures like this is just not there. But maybe we'll see a future solution come from the insurance industry. But it's certainly something that they're aware of early on that they weren't designed to cover. Travel, I've mentioned this one here. Obviously, this was where we were seeing a lot of early inquiries in January and February. For any travel booked in before March, we'd expect that the policies will still respond to claims for cancellation, but be mindful some domestic and direct online policies may have a built-in exclusion for pandemics. Certainly any travel that's booked now, if you were able to actually book any, so that's changed even in the last 2 weeks, we wouldn't be expecting the policy to respond to claims for cancellation because it's well and truly now considered a known event. Insurers aren't going to agree to take a premium in exchange for an almost certain claim. So this will be an interesting one. Definitely, if you have a corporate travel policy that's coming up for renewal, we'd encourage you to look at those estimates. There's no point paying premium if you're not going to be traveling. And also, one to be mindful of in the future, there's probably going to be new exclusions and stuff built onto these policies, but if they are, that would apply from renewal. So just always be careful of what your renewal terms are to make sure they're responding to the cover that you need. So look, that's a quick run through, but certainly give us a call or send us an email if you have any questions. But we just thought we didn't want to take up too much of your time. This last slide here, I've thought it'd be worthy to talk about what we're recommending you do when your policy comes up for renewal, and that's whether it's with us or with somebody else. So definitely on public liability, usually the main rating factor there is turnover. So very much, and your estimated turnover for the next 12 months. So I very much encourage you to evaluate what you think that will be. If you are anticipating a reduction, declare that through to the insurer, because the premium should reflect that reduction. Obviously, the other factors will come in about if you've had claims and those kind of things. The other one there is for actual wages. That is usually about workers' comp. So at the end of the year, you're asked to estimate your next year's wages and what your wages were for the past year. If you have had to reduce staff hours or reduce staff pay in any way, that actual wages figure should lead to a return in some of the premium. The third one there is stock levels. If you're not doing as much work at the moment and have reduced your stock, that might be some area you can get a little bit of relief on your property policy. But with that said, we have certainly not seen a decrease. If anything, we may have seen a bit of an increase in theft claims come through, particularly theft of tools from vehicles. Might not be connected to this situation, but definitely don't think just because you're not using your tools or your stock that it can't still be stolen or damaged. So be careful about where you look to make savings, because the insurance still needs to provide the cover. So look, I'll leave it there at the moment. I know there were a couple of questions that we had. You had some there, Lee?
Great. Thanks, Alex and Lee, for your informative presentation. The content was quite useful, and I'm sure our members gained a lot from it too. If anyone in our audience has any questions or comments, please raise your hand now or type the question in the chat box. So I have a couple of questions here. The first one is, what if I'm not with NECAGuard? Who can I speak to?
Okay, yeah, I'll take that, Alex, for a start. So just in terms of the information we've given you today, while some of it is reasonably specific to NECAGuard product, it's all quite general in nature. So what I would say is, for any of you who aren't quite sure or need some more information, each policy is going to be slightly different. So we would encourage you to speak to your insurance professional, even if you're not with NECAGuard. Speak to your broker, speak to your insurer. But the offer is genuinely there for members as well, and we've opened this up across all states. But certainly if you do have questions and you are, I guess, struggling to get answers out of your existing provider, myself, Alex, Andrew, the rest of the NECAGuard team are available to give you some general advice. But as I say, that will be at a product level. We would need some more information about your specific situation, but certainly in the first instance to your existing provider, but using the, I guess, the NECAGuard email address you'll see on the bottom of your screen, and that number, feel free to reach out to us as well.
Great, thanks, Lee. Another question here is, how far out from my renewal should I be speaking with my broker?
Yeah, I can take that one, because that's what Andrew and I are doing every day. Look, usually we send out renewal notifications about 60 days ahead of time, and that usually gives us a good run in to provide the renewal terms. Usually insurers are only able to do that within 30 days of your renewal, but the earlier we have the information, the better. So I'd imagine most brokers are in a similar situation. Yeah, but certainly if it's a last minute thing, we're always able to help if we can. But yeah, the more time, always the better.
Great. Thanks, Alex. And another question here is, what is the effect of COVID-19 on my insurance renewal cost?
Gotcha. So I touched on this briefly, I guess, in the overview. We haven't seen a dramatic change, I guess, with relation to COVID so far, but I'll definitely say that that is evolving as we're speaking. What we have seen, I guess, is more around the payment terms. So what I would say to you is, if you are in a situation with insurance, which is generally an annually renewable contract, we would normally see an annual payment be made. What we have got the availability to through NECAGuard is look at monthly instalments for commercial insurances, and also structuring those. So if there is a cash flow issue up front, we can actually structure the repayments so they're potentially smaller up front